Hi, welcome to Russell Investments Market Week in Review for the week ending September 13th. I'm your host, McKenna Painter. Dialing in with me today, all the way from Australia, is Senior Investment Strategist Alex Kusley. How are you doing, Alex?
I'm doing well, McKenna. How are you?
I am doing fabulous, Alex. All right, this week has been quite eventful in the markets with several key developments that we'll be diving into. So grab a coffee or a drink and let's get ready to party. First up, US CPI. What are the market implications and what does this mean for the Fed?
Sure. So we had a slightly hotter inflation print for the month of August in the US. In terms of what it means for the Fed, though, we don't think it means a great deal. If you think about the Fed's mandate, they think about inflation and full employment. In the last 2 or 3 months, we've seen a shift away from focus on inflation to employment. So this really doesn't move a great deal. We think the Fed are going to cut rates by 25 basis points in September. So they have a meeting next week. And from that point on, we're going to go through a 25 basis point cut at each meeting until we get to around that 3 to 3.25% that we think is neutral for the Fed. The market implications for us, the biggest thing is around government bonds and duration. For a while now, we've been talking about really attractive tactical opportunities in government bonds as valuations looked really attractive and sentiment was quite oversold. As we sit here today, though, the sentiment piece is no longer oversold and those valuations are closer to fair rather than cheap. And so within that tactical opportunity has largely played out as government bonds have done well over the last 2 or 3 months.
All right, interesting. Earlier this week, we had our presidential debate with Kamala and Trump. What are the next watch points and what is Russell focused on?
Yeah, I mean, it's kind of funny being an Australian sitting in Sydney commenting on the US election cycle and presidential debate. In terms of the debate, polling markets are pointing towards a win for Harris. And polling markets, actually, if you look at the presidential, who is going to win, we're basically back to 50-50, so we're perfectly even. For us, the biggest watch point really is around the evolution of those wave scenarios. So where you see a party win all three, so the presidency, the House of Reps, and the Senate, that's when you get those big swings in policy either direction. And right now, polling markets are pointing to that divided government being more likely. We don't have a really strong sense of what the big watch points are from here. There doesn't appear to be another debate on the horizon. And so it's really going to be around, particularly on the Democrat side, fleshing out the proposals for policy, because that will give us a better sense of where each party would like to get to if they were to get that wave scenario. So that's really for us is just the policy proposals as they come out for the next couple of weeks.
A lot to take in from that. Let's take things across the water now. China. We just got their trade data and inflation data. What's the latest on those?
Much closer to home and much safer territory for me is the Asia Pacific strategist. So effectively, the trade data was better than expected. So Chinese exports were quite strong. I don't know how sustainable that really is going to be, though, given our view that the global economy is slowing. And you also have the backdrop that there could be some pulling forward of Chinese exports. With the potential tariffs, if we don't know where the presidential debate or the presidency race will go, but if Trump gets in, tariffs are a big focus of his. On the inflation side, though, it really highlights the challenge that we've had in China for the last 3 years. That domestic demand is very soft, and so we saw softer inflation numbers. China is very close to deflation, so core CPI on a 12-month basis is 0.3% year on year. So it's got the exact opposite problem that the West has had for the last 12 months. They want inflation to be a bit hotter than what it is, especially with the amount of debt that the Chinese households and government have. So we've been waiting for more policy responses. We haven't got them yet. They're still likely to come at some point, but we think that now it's just that we need a softer economy. They need weaker economic data to come through to be the catalyst for that policy. So we're in a very much a muddle-through environment in China right now.
All right, well, cheers to that. And that's a wrap for this week's Market Week in Review. Remember, the market never sleeps, so stay informed and keep your strategies sharp. Stay savvy, and we'll see you next week.
Hi, I'm Sophie Antal-Gibert, Head of Portfolio and Business Consulting at Russell Investments. If you liked what you just saw and heard, consider subscribing to our YouTube channel or check us out on LinkedIn. Thanks for tuning in.